Now, Trump's attack again on the US Federal Reserve didn't seem to impress investors that much. We had a little slide in the US dollar, but not a sharp market reaction overall, is it?
That's right. I think that markets know very well in the meantime how to take these sort of comments on the part of the US president. I think that nobody really expects Donald Trump to really shrink or to really endanger the independence of the central bank in the United States, which would be detrimental for monetary policy, for the credibility of the country. And you can just look at Turkey, how much the pulling into question of central bank independence can harm a currency and an economy of a country. So this is what I think markets perceive when they made a very mild judgment about these comments.
Absolutely. The comment did encroach again on the independence of the central bank. It's really a red line, something a president should not do because it's against the principles of a central bank. In the investor community in Switzerland, do clients of yours, friends you're talking to, actually still listen to Trump's tweets and remarks?
Of course, it's apart from the fact that it's very entertaining, it is also something that we really need to watch out. Of course, it is a bit of an odd way of communicating, but we can, in the meantime, I think there is a much better understanding of what the president wants to say. And in some regards, for example, this action, this tweeting against the Fed, it probably has the backdrop of the nearing midterm elections. Trump wants to keep his electorate happy. He wants to make sure that it's a bracket of roughly 35% of the US electorate that stays with him at all cost, will remain there for the midterm elections on the 6th of November. So I think this is more to say, look, I make sure that the US economy stays healthy and the Federal Reserve will not be able to stand in the way, even if they wish to hike interest rates. I will make sure this will not harm the US economy. I think this is very much the statement.
Trump's comments to Reuters came just days before Friday's Fed meeting at Jackson Hole, the symposium there. What are the big challenges for the Fed right now?
I think the big challenges for the major central banks, of course, led by the Federal Reserve, are to administer a soft tightening of monetary conditions. That is, in the case of the Federal Reserve, sort of shrink the balance sheet in a very gradual manner, at the same time keep hiking rates to a new normal, to a new net neutral level, which will probably be the case sometime in 2019. But to do that in a way that creates no harm, on the one hand, for the US economy itself, as well as for the broader economy out there, especially for emerging markets. And we can see that the tightening of global monetary conditions is already starting to have an impact of countries such as Argentina and Turkey.
Absolutely. Now, for Powell, do you expect a more dovish or hawkish stance? Because a lot of investors are actually expecting him to make a point, given the remarks by Trump, right? To really show him that, hey, we are independent.
I don't think that this is necessary. I think that everybody is giving even Jerome Powell the benefit of the doubt. He's well respected. Everybody knows that he's a very capable chairman of the Federal Reserve. So I don't think he needs to do that. If he were to do that, that'd be more of a way of just reaffirming that the US Federal Reserve is firmly on the way of normalizing the monetary stance, because this is what it's all about, really regaining some ammunition for the case that at some stage in the future, growth will slow and the Federal Reserve will need ammunition to do something about it, i.e. in the sense of lowering interest rates again, as they have always done in the past. So I think it's very much about sending a very normal signal to the markets that Jerome Powell will do, and I think he doesn't need to really react to Trump's tweets.
Do you actually believe that he gets along a little bit better than his predecessor, Janet Yellen?
I think yes, to be honest with you, and I think with the very fact that he obviously was picked and appointed by Donald Trump really makes it a bit easier. But if you look at the big challenge of what the White House can pose to the independence of the Fed, of course, Trump used to challenge Janet Yellen quite a bit, and I think this was very much the nature of his communication. Not so much really the attempt to undermine the independence of the central bank per se. So I think that we just need to take it as it is, and I think that it will not have a long-lasting impact on the relationship between the two gentlemen.
If we stay briefly in Jackson Hole, do you actually expect a common action when it comes to Turkey, because Turkey is still the talk of the town for much this week, even though there's a public holiday and markets are closed. But do you expect that the pressure on Turkey and policymakers there are building up?
Well, I think, if at all, Turkey is probably a case in point where you can say that now the global tightening of monetary conditions is starting to have an impact and starting to show in some countries, mostly those with a strong current account deficit, mostly with those with a strong level of inflation, as in Turkey, 15.9%, and probably with depleted reserves of foreign currency, which is all the case in Turkey. Now, in these very cases, it is of course necessary to really reinforce, maybe by statements in Jackson Hole, the independence of the central bank, because definitely Turkey is a case in point where the central bank independence is challenged by the government.
Absolutely, because you have a lot of kind of family relations. The finance minister is related to President Erdogan. What kind of decision are you expecting from the Federal Reserve's FOMC meeting tomorrow? We are still on track probably for 4 interest rate hikes this year. What do you think, Martin?
I think we are still on track, yes. And it's actually what is priced in by Fed Fund futures. So this is what markets are expecting as well. And I think that, with the strong data that we had in the US economy in the second quarter, with a very strong reporting season where we saw no signs of weakness at all within US companies, with the domestic demand being at very, very healthy levels and the unemployment levels still at historical lows, I think this is the point in time where the Fed needs to take the opportunity of the moment, this window of opportunity to really normalize monetary policy conditions. So they are probably trying to stick to that path and go for 2 more hikes for the rest of this year.
In your research note, I read that you're actually expecting an earlier end to the balance sheet drawdown. Can you explain a little bit further how early that is and what the implications might be?
Well, that remains to be seen. We could actually even see some points in time where the Fed moves back from its balance sheet shrinking because of the liquidity conditions in the money market. And for a central bank to really have full control of their main target, and that is money market rates, they might actually want to re-inject some more liquidity into the money market. It's more of a technical issue. We would not think that the Fed is really rethinking their monetary stance altogether. We would rather think it's more of a technical issue where they want to keep full control of the money market rate. And if the money market rate becomes too close to either the floor or the ceiling of the corridor the Fed wants to control, then they probably want to do something about the liquidity, the liquidity level. That's I think the backdrop of this.
Let's bring things home to Switzerland as well. And the SNB vice chairman said last Wednesday that the appreciation of the Swiss franc against the euro will actually justify its ultra-loose monetary policy. Do you agree with that, or do you expect any intervention by the SNB anytime soon?
I would think that, of course, the level of the Swiss franc is very important because, as we know, the Swiss franc is very export-orientated, and by that, very likely to react to a strong strengthening if it were to happen.
What is the fair value of the Swiss franc in your opinion?
It's very hard to say. It's probably slightly loose, slightly less than this. It's probably close to 120. As we've seen in the past, that it's a level that works very well, and by that, I think that the SNB just wants to make sure that the Swiss franc doesn't appreciate too much. And by that, very, very closely follow the monetary steps by the ECB.
Maybe the SNB should still peg the Swiss franc to the euro at 120, isn't it? But do you think that the SNB should intervene if the euro appreciates further from here?
Well, it depends. It depends how strong the underlying fundamentals are. As a central bank, you can definitely fight, let's say, shorter fluctuations around a targeted level by interventions, by just purchasing one currency or the other. But you cannot, fight fundamentals in a longer-term perspective. So it really depends what the drivers are. And at some points, it is probably in order to maintain your credibility as a central bank, it's probably at some points, if the fundamental drivers are too strong, it's probably better to shift your target to another one. The
US-China trade talks happening this week. Are you as optimistic as others when it comes to the trade talks or more bearish?
I'm not really sure if it might actually be too early for Donald Trump to go for an agreement. Because what I think is that actually at the end of the day, we will end up with lower tariffs altogether. I think this whole trade story, and Trump has been obsessed about the US being pushed around in international trade, and he has been obsessed about unfair deals and unfair tariffs. So that what I think is he wants to end up with is lower tariffs for everybody, so that he can sell to his electorate, look, I'm the greatest deal maker ever. I came back with a good deal for America. I came back with lower tariffs. And that holds true for both China and Europe. All I'm not sure about is that it might be too early because, again, it's a topic that is very important for him for the midterm elections on the 6th of November.
Now, Asian stocks, we have seen that in the market summary, have rallied. Do you expect this bull run to continue, or is this just short-lived?
Well, of course, this is very much of this on the back of news that something might come out of this meeting. Again, even if it were to happen, and even if there were to be an agreement where China, for example, gives in and says, look, we can go for lower tariffs, we can go for a stronger protection of intellectual property rights, that would be a very good deal for Trump. Again, from the political campaigning standpoint, maybe a bit too early, but it would definitely be positive. He would walk back to his electorate in the Midwest in America and say, look, I promised you a better deal. I promised you to come back with something that makes America great again. And here we go. We have lower tariffs agreed with China. We have actually better protection of our intellectual property. So this is what I negotiated for you. And but I think this would be very, very positive, of course, for markets. And if this were to be confirmed in the next couple of days, then Asian assets would continue to rally.
It is surprising how fast and how soon the effects of the trade war are starting to kick in, because recent economic data out of China, for example, fixed asset investment growth and also industrial output, those numbers have disappointed. So it's incredible how soon we see this impact. So I guess policymakers and politicians should be able to sit down on the table.
I think this is an additional squeeze on the Chinese growth story. I think that actually the deterioration of numbers that you just mentioned come from another angle, and that is China reining in credit growth. Because the Chinese government is really worried about the stability of the financial system, and this is why they are trying to rein in, especially shadow bank lending, which is, of course, having a detrimental impact on growth. So you always pay a price.
And then we have, on the one hand side, all the local domestic issues, the slowdown of the Chinese economy, shadow banking, as you mentioned, etc. And we have the outside forces as well. Mm-hmm. So the Chinese economy is kind of in a sandwich position right now.
Yeah, at least it makes it a bit more likely that the Chinese are willing to agree on something on trade. They want to keep trade flows going. Of course, they know about the interlinkage between global work production chains, etc., ranging across countries, ranging across continents, even with ranging from the US into China, with Europe in the middle. So this is the big game, and of course the Chinese do not want to lose out. They are among the biggest winners of globalization. Of course, they don't want to rein in globalization too much, and this is why they have, of course, some room for maneuver. They have some pressing points as well, but I think they are very much willing to make a deal.
So Trump on Monday said, though, that he's not very optimistic that a deal can be struck between the two countries, and he's pretty pessimistic. Are you that hopeful?
Well, I think if he says he doesn't expect much, first of all, that could be a negotiation position that, just manage expectations. And secondly, I'm not even sure that he wants a deal right now. Again, it could be too much appeasement for him at this point in time. He could actually be willing to push the rhetoric a bit further out, to bang the drum a bit more, so to say, to keep his electorate awake, to see, look, guys, I'm still fighting for you. And then when the election day comes, just before or just thereafter, he goes for a deal. That could actually be the strategy. So I'm not sure he even wants a deal right now.
And also business will continue between the two biggest economies in the world, not as usual maybe, but if businesses are willing to add 25% in tariffs and also take into account all the risks involved, obviously all the big players, they will continue with their plans and their businesses, right?
Well, I think that, just introducing in a mutual way, like 25% tariffs on your goods and you introduce 25% tariffs on my goods, that's detrimental for everybody. That's like building a wall right through the factories in America, in Asia, and everywhere. So when Trump says trade wars are great and easy to win, he definitely knows that it's wrong. So this is just, again, he's already switched into campaign mode, and he's using this trade war topic as a sounding board. And this is what we need to keep in mind. Eventually, I think we will end up with lower tariffs.
Before we go, Martin, let's quickly talk about Brexit as well. We had this meeting today and the threat of a no-deal Brexit. So it's really crunch time in the UK right now. The pound could fall as much as 1%, if things go bad. What do you think, and what kind of implications and impact would it have on Switzerland?
Well, first of all, I think that the pound can fall a lot more. Actually, in case of a no-deal Brexit, the pound can fall a lot more than 1% from today's levels. And of course, it would be detrimental for the whole of Europe, including Switzerland, of course. It is not so much a question about the exchange rate anymore. It's a question about really the future of trade flows between the UK and continental Europe. Switzerland could actually be a winner if companies really redirect their business out of the UK and into Switzerland.